It's time now for today's strategy session. The U.S. stock rally slowing as investors debate the Fed's path of interest rates. But what do the technicals tell us about where the stock rally stands? Joining us now to discuss, we've got Adam Turnquist, LPL Financial's Chief Technical Strategist. Adam, it's great to speak with you. So I just want to start pretty broad here because we are seeing that post-election rally giving back nearly over half of its gains. What do the technicals tell us about what's coming next for this rally?
Hey, good morning. Thanks for having me on. I don't think investors should be too surprised we're giving up some gains here. We were very overbought coming into what we call overhead resistance marked by the upper end of this longer-term rising price channel. The S&P 500 has been for this bull market. Internally, we saw about a quarter of the S&P 500 get overbought as well. So we're taking some profits here, pulling back. I think the key level we're watching in today's session, 58.60, 58.65, that's the price gap coming out of that post-election rally. If we start filling that gap, that goes to a failed breakout and does open the door for some further downside. But longer term, the trend is still up here. Breadth still very bullish with cyclical leadership. So I think it does set up for a potential buy the dip.
You know, as we're thinking about this, I'm taking a look at a note from the UBS that's in my inbox right now, and just talking about and addressing some of the gains that were given up last week, but also the headline that they're sending was redeploy excess cash. If investors are trying to look across and kind of cut through some of the noise of the opening bell here this morning and some of the first trades that have fired off and trying to initiate their own strategy, even despite this pullback, where are the areas that they would be apt to look at and set more long-term positions?
For longer term, we like the industrial sector as one idea. It's been one of our overweight sectors for this year. That has pulled back as well, still trending higher. I know there's some concern over defense spending and cuts in that area, but I think overall, when you look at the themes playing out in the industrial sector, you have some leverage to AI with the data center buildouts, that reshoring, nearshoring theme as well. Those should be some pretty good tailwinds for the sector. We like it on the earnings front. The fundamentals look good. Technicals also look good, and we're seeing some relative outperformance there.
I know you also, in your recent notes, talked about the small caps rally being a bit overdone. Do you see opportunity then in mid caps for investors who want to look beyond those large cap names?
It's hard to compete with the big caps right now. And even at the mid cap level, they do look a little bit better than small caps. And there's been a lot of excitement post-election about small caps. Are they finally going to start outperforming? The answer technically is no. They've had fits and starts of this excitement and outperformance that have been really suffocated by the large cap leadership that seems to be reasserting itself. Of course,